Aloha and welcome to Java. Thank you all kindly for joining me. It's October 10th, 2024. It is also Thursday. There's quite a bit going on this morning, not to mention CPI, which will be the large number prior to the market open. But before we get into that, I would like to send a special shout out to all of those who support this channel every morning. I truly appreciate you. Thank you, Doug, for all that you do as far as supporting this as well. And we had a fantastic Discord discussion last night, brought in a lot more resources that you can use in these times and for what is coming forward. So if you missed the discussion, please go in there, check out our library of resources, things that you can use. You can also ask questions there. If you need a link, please leave either a comment below or just ask me in the email because we would love to have you in there. We've just closed it down a bit to scammers and bots. So please ask me for a link. Leave a comment or question below and we'll be happy to address that. With that, let's start in with what's going on in the markets. Now, our favorite risk indicator, the MMRI, is elevated. We're at 260.9 right now. And what that is showing is basically the increase in the risk in market going along with the fear greed meter showing retailers strongly into this. Basically, a lot more gambling going on, and one side of the boat is loaded more than the other now. So, this is increasing risk territory. We had markets ended green yesterday. The SPY basically closing again, hitting all time highs on all of the inflation easy money. Now, this could have a bit of a change today, and I'll talk a little bit about why. So, the big story is why CPI surprise could trip up the Fed's rate cutting plan. So, easy money from the Federal Reserve planning on cutting these rates. If inflation spikes, then it is expected that they might basically slow down on the cutting plans toward the end of the year. Now, with this, the first things we look at are the relative strength of the dollar and the 10-year yield. Now, 10-year yield rising above 4%, 4.089, and we've got cryptocurrencies under pressure right now. One thing that did happen that I do expect to hit our markets today, basically, is China. Again, the PBoC rolling out swap facilities to support equities. Now, basically, more easy money from their side, flooding their market. Their market's green overnight. European markets had a little bit of a struggle. But when this happens and it boosts their markets, it tends to basically have money flow from the United stock markets over into their market to make more basically on their easy money, sort of the yen carry trade, if you will, just the arbitrage going on. So with this, while currently US stock markets, as I'm doing this, are in the green, the futures below it are showing also might be a little bit of trouble ahead, although it's slight. We've got gold and silver as well as oil bouncing on the issues in the Middle East. So with these fears, gold staying above the $2,600 level, silver recovering from the $30 level, basically. So all of these basically tying in the money flow. So with this right now, we've got cryptocurrency struggling on the buying. It is a buying opportunity before recalibration. We'll talk about that in a second. We've got the 10-year yield gaining strength again. That will pressure stocks. And we've got the precious metals and oils rising. Opportunity to stack before they get too high. So one thing I would like to speak about for just a moment is that with the Federal Open Market Committee meeting minutes yesterday, in his post-meeting press conference, Jay Powell described the rate cut as a quote-unquote recalibration. He noted his adjustment could not be interpreted as indicating less favorable economic outlook or suggesting that the policy easing would accelerate beyond what they have figured on. Basically, the reason I'm bringing this up, recalibration is the word we want to look for. So watch out for that moving forward. Why do I say that? That is basically revaluation of the dollar, if you will. So the dollar is losing strength. We're watching inflation. As it is going to increase rapidly. And then they're also tying this in with employment or the labor market. Now, the numbers they come out with are not accurate. They're generally revised. But what we want to keep our eyes on are what they're doing in the background, not what they're saying in the front. So with this calendar today, we're expecting jobless claims CPI prior to the market open. And then Friday prior to the market open, we're getting core PPI and PPI over the years. So all of these inflation numbers, it's expected that they're going to show further disinflation. Now, I don't like this word either because all of these things are made to basically distract, basically make you think something other than what is going on. Now, the currency is still in inflation mode, but it's less than it has been. So you're still losing purchasing power with your dollar, just not as fast as you did last month, is what they're saying. So banks, we're also going to hear from earnings tomorrow. That's going to be potentially a large market mover. JP Morgan, we're going to watch what goes on with them. Now, we have Bank of America. Recently, we've had Warren Buffett sold off a large portion of his holdings. He had a large stake in them. And with this, he made quite a bit of money off of this, but moving more towards a currency position. So basically, sitting on a pile of cash, waiting to buy the larger dip that he thinks is incoming. He's not the only one. There are larger companies and corporations as well doing similar. So with this, we've got BankThink talking about tokenized deposits are the real game changer in the financial sector. Now, tokenized deposits, basically, they are able to bank on, trade, and play with your savings. So I want you to think about this for a moment. A lot of people don't realize banks have a bail-in clause that if they get into trouble with these trades that they are doing with your assets, they can seize these assets or basically freeze them until they're out of trouble. So if you still have large amounts of money in the bank, please rethink that as quickly as possible. You need to get it out. Okay, a couple of other things I would like to speak about. Germany, largest powerhouse manufacturing in the EU, downgrading basically their economic forecast. Now, their GDP is expected to decline by 0.2% this year. This is huge. This, according to the Ministry for Economic Affairs. Now, they are the largest, basically, as I was saying, managing powerhouse in Europe, the only ones manufacturing. And then with this, we've also got German public sector workers looking for an 8% pay hike. Now, they're saying to boost the economy, but what I would like to say with this, public sector, this basically government paid jobs. They do not manufacture or produce. So if you're expecting a decline in your GDP, your manufacturing is going down, and those that are basically sucking away from that is the public sector government jobs increasing by 8%. What does it do to the economy? Just a thought. Basically, it's going to plummet. Okay, so with Tesla, we are expecting Robotaxi Day. Now, getting a lot of back and forth on this because Elon is going to basically hold this conference, but at the same time, this has been held before, and the investors have been disappointed because he's put off this date several times. It's been put off for a couple of years, actually. So we'll see what happens today. Possible movement there. Now, a couple of things I would like to bring up that are outside of the markets, but still potentially moving as far as global shift, as well as in the long run could hit your finances. So we've got the USS Boxer providing disaster relief after the typhoon hit the Philippines. Now, bringing this up because we're providing multi-million-dollar aid to other countries, but again, the local victims of the recent Hurricane Helene, and then also we're expecting damage from the current one hitting, as we speak, Milton. and basically failing our own citizens. They were given a small amount of cash and very minimal disaster relief. So this should be an outrage that all of the money is being sent abroad, the tax dollars, but nothing is being sent locally. And there is also another agenda here. I have to be very careful about how I speak about this here. Another reason the Discord is important is because we can speak a little more freely about these, but basically a lot of the issues and damage that was done is due to enhanced and engineered destruction of these weather patterns. And you can look into this if you like, or ask over in the Discord. Be happy to fill you in on what is actually going on with this. So, one last thing I would like to bring up, and this is blockchain fixing misuse of biometric data. This is a new company called PBoC. Now, he's bringing up an extreme point that I've been bringing up, is you cannot replace your biometric data, your retinal scans, your DNA, your facial recognition. So the companies that store these data basically should have the highest levels of security. And the counter to this is basically the government wants to store all of your data. And I urge you not to. If you can avoid this at all costs, do so. And he brought up a critical point and a quote that during World War II, the thorough documentation of KYC is what we call it for short, or know your customer, banking and voting records led to a systematic persecution of ethnic minorities in Europe. And this is true. So could it happen again? It's up to you if you are at all concerned about these things. So with this, I would like to wish you all a great trading day, wonderful day in general. And if you haven't joined us yet, join us in the other forums. Please hit the like if you like any of the material in this. And until I see you again, my friends, stay free.